Welcome back to U.S. Farm Report this weekend. We have Peter Meyer as well as Chip Nellinger joining us. Peter, when you look at soybean prices this week, my goodness, soybean prices continue to soar. But can you point to true weather issues in South America, or is it more outside money that's driving that rally that we saw this week?
I think it's mostly outside money, and to me, it looks like almost a FOMO trade. It's fear of missing out. I really don't. I don't get it. I mean, okay, we've seen some of the private estimators be as low as 125 or so, and we can argue that the potential in Brazil was maybe 150 earlier in the year, but now they're down to 125. There's been a couple of them at 125 earlier in the week, and it just keeps going higher and higher and higher. So I don't know. I mean, our team in Brazil thinks it could still be a 130 in the low 130s, so that's where we are. And Argentina, they say, is okay, but to me, it looks like money flow. But I also, when I look at, I'm not a technician, but when I look at the daily charts and see the relative strength index at about 80, that really concerns me a bit.
Chip, I mean, Pete mentioned it. It's not like these forecasts in South America changed. It's not like we had a lot of, news that came into this market. So that's why he pointed to kind of this outside money and that being the main driver. Do you agree with that?
Yeah, I think it's a little bit of a combination. I mean, there were a couple of days. One time in the overnight, we had it's about 5:30 a.m. Central Time. You had a 20-cent bar higher in 1 minute. So there's some big buying in there, some money coming in from the sidelines or wanting to be long. That's a market order at $15 beans and, just kind of crazy action. We saw that again today during the session, maybe not quite that extreme, but there is just a ton of money coming in. I think part of it is the adjustment of the market to those 125, 127 type crop estimates that Pete was talking about. I think maybe in the market's mind, we still had a chance at 130 in the low 132s. Maybe we ultimately do shake out that low, but markets always overshoot both ways. And I think you're in the process of seeing that happen on this old crop, overshooting to the top side here, overdone, kind of getting a little choppy here up near the highs. So historically, when you see beans north of $14, you always, whatever year it was, if you go back 30, 40 years, you're going to see some $1.50, $2 swings and corrections, even if we haven't ultimately seen the high yet. So we better buckle up and get ready for some volatility here.
Yeah, well, that volatility seems like it's here. And Pete, now we're getting into the acreage debate. Acreage decisions, and this debate is far from over. As we see soybeans on this impressive run, do you think that corn needs to claw back, fight back, and buy some acres?
Well, I think what's really happened here is that, if we had spoken maybe a month or just at the end of last year, it would have been a no-brainer. You would have looked at the board and said, okay, you got to plant corn. Now it kind of changes a little bit. Now, I started the year, and we typically don't start the year that early, but we started at the end of November because clients were asking us, and I came out at 90 and 90. And one of the reasons is not necessarily the price of nitrogen fertilizer for the corn, but really more of the availability. I mean, we hear from plenty of farmers, yeah, I got it locked in. And then you ask the next question, well, have you taken delivery of your inputs yet? And that answer is no. And it scares me a little bit. I mean, we saw natural gas this week, up 50 cents one day, down 50 cents today. It's a little bit nerve wracking. So as natural gas prices were going down a little bit, I kind of adjusted our acres to be 91 million corn and 89 million beans. So I worry a little bit that there's going to be too many bean acres because it's not going to be the year where all these new crush plants for renewable diesel and sustainable aviation fuel start to take hold of the U.S. Crop. That's actually another year out. So we may end up with a little bit of an issue here. I would say as well that I was on the Corteva morning call, on the earnings call today, and they're at 90 and 90. But then again, they're a large soybean seed producer, so you have to expect that a bit.
Yeah, well, and you've been talking about that crush demand, and that may not be until 2023. You've been talking about that since last summer. But Chip, now in the more immediate term here, do you think we're in for the wildest acreage battle that you've seen?
I think possibly. And, this is kind of my hot button anyway, because I just despise the March acreage number. I despise it. I don't think it's very good information. I think it's not the right timing. But nonetheless, no one's asking me about how to change it. So I do think right now you have estimates, and it's early, right? Usually we haven't seen these type of estimates this early on. I've seen them from 87, 88 million on the downside in corn. University of Illinois ag economist is at 96 million corn acres. And so I think you're probably looking at the widest variance of opinion here, low to high in corn acreage that maybe we've ever had. And, I don't know. I'm probably in Pete's camp. I just cannot see a lot more corn acres. I could easily see it unchanged to lower. I think you could pick up a couple million bean acres. It depends on where you're at. If you're sitting here on the best ground in Illinois, Iowa, Indiana, and you can raise 240, 250 bushel corn, you're saying, I talked to him, you're saying, Chip, there's no way I'm going to plant more bean acres. However, that's a minority of the corn belt and minority of the acres. You get in the northern plains, the Dakotas, there's 6 or 7 different, crop mixes they could have. Corn's probably at the bottom of it. Cotton's going to pick up acres in the south. I've already talked to people in southern Indiana, southern Illinois. They're going to plant a few more bean acres because they weren't able to price the nitrogen and fertilizer early on. They wanted to, but their supplier would not let them. And so I think it's a real wild card, and I just cannot see how we're going to pick up a large amount of corn acres unless you'd happen to spend some time the next few weeks north of $6 December corn. I just don't see how we're going to pick up a ton of corn acres. So I think it opens up the door for a wild surprise and a lot of volatility on that day in March when the acreage report comes out.
Just a Chip's comment as well. I mean, NAS hates the March number. Everybody hates the March number. Chip and I hate the March number. Lance Honig hates the March number. It's just useless information, and that leads me to believe, and I think Chip would agree, that we're going to see a lot of volatility after the number. Maybe we start to see some volatility after the USDA outlook forum here in 3 weeks. I'm not sure, but I would agree with Chip. It's going to be a battle. And I do hear occasionally from a farmer that's just angry about the nitrogen prices saying, well, the hell with it. I'll just plant beans.
All right. We have a lot more to cover. So let's take a quick break and then we'll have much more right here on U.S. Farm Report.